welcome back to Proxy Financials, the 52-week challenge video. We are coming into week 15. It's been a while since I have posted on this channel for the 52-week challenge. Unfortunately, I was tied up with other things, so I apologize for that. We'll give you a little heads up in this video what has happened in regards to the small account. We did start with $1,000 at the beginning of the year. We have pushed up, was following the trend of the 10% ROI weekly. However, we have fallen back down into the red territory. As you can see here, the holdings right now is in SPY. So as of the last video, I was in ALJJ, and that did not turn out. In fact, it cost me quite a lot, just not also losing at around 25% of the account. But in addition, I missed out on my original pick for CHEK to do a pump and dump, which I did predict and did come true. So unfortunately, I missed out on my opportunity to capitalize because I would not pull out. And this is a reoccurring issue that I will learn from. So do not do the FOMO and lose money. Take those day trades, get out. So with that said, the rest of the video will be talking about what I think is coming up next, which of course is SPY. So that's where we're sitting in right now. So as we switch over here and look into my call position in SPY, as you can see, I have 19 calls. I have them set to expire here in June 18th. So we got a little over a month before they do expire. However, we have some interesting news in the past week that I believe is going to really push my calls up to where I believe they will be finishing off at the end of the month. So we are currently down at 34 cents per call right now. I did get in at 64 cents, so I am also in the red. So as we saw earlier, $1,200 and some change has reduced down to the $600 and change. We have been also lower than that before, so we are okay with that because this is a long position. The only thing I wish I would have done is done some the poor man calls, which would have helped me reduce the amount of money that I lost while we were in the sideways channel. So we'll switch over to SPY so we can see that sideways channel. So here we are in the SPY. Looking at here, as you can clearly see, we were, I should say, in a channel going sideways, which really eats up on your calls or puts. Doesn't really matter which way you're going. But as you can clearly see here, we zoom on in here, we did break out of the channel. A couple of reasons for that is because, one, the short squeeze occurred on the hedge funds that were doing short positions over this entire channel, keeping it down. And that was because they were waiting on the big report that came out on Friday that we also got a sneak peek in on Thursday, which was the unemployment numbers are not looking good. And I know that sounds weird. It should be sending us the opposite direction. But in the current situation of the economy, they want to keep those interest rates low so that the economy can improve. What's that mean? It means the Fed is going to continue to print money, which makes the dollar weaker. But that's okay because everyone is also printing money. So it's not like we were the only country. So we do have to keep an eye on the inflation. The Fed is complaining about how people think we're going to go into hyperinflation. I do not think so because we are not the only country that's doing that. China's doing it, Japan's doing it, everyone is doing it. So if everyone's doing it, yes, that means more money is out there, but it also means that the inflation isn't going to go into hyperinflation. We do see some inflations on things like lumber and oil right now, but I expect that to reverse as we start increasing interest rates later in the year, if not next year. So that's one reason why we're looking at a more bullish market going forward. Interest rates will continue to stay low. We do not see them going up. Next, we have more stimulus money coming in. If you are not aware, the second half of the stimulus money that people were going to get in terms of the past bill back in March is triggering tonight into next week, and it will continue. What's that mean? More stimulus money will be coming into the markets. This will continue to push this even higher. We are probably going to see much more push towards 430. Hopefully, if my suggestions are 430 by the end of this week, my kind of goal is every 3 days, if we can go up just $7 in SPY, we will reach the goal of 450. That is correct. I am predicting 450 by May 28th, and I expect May 28th to be a Super Bowl day because that is the last day before a 3-day weekend, which we all know you always go bull on those days. Almost 90% of the time it will shoot up because people are going to hold money over the weekend into that 3-day period because the holiday, of course, is Memorial Day weekend. It's going to be a great time. I look forward to seeing higher highs. So I may either execute on the end of the day of the 28th because usually there's a sell-off the next day when trading begins, or I may end up holding. It all depends on what I see, but we'll come over here to the options to kind of show you what we're looking at. So if we come here to the options, if I do what I think is correct, we have to come down here to roughly the same time period. So 19 days away. So I come here and look, what did 19 days away give me? In the money, we're looking here anywhere about $5. So I currently have it set to sell at 424, but 420 does have me at about 650. I may scalp it up, and if I can get it into the 650, that will push my total earnings from $8,000 up to $12,000. What does that mean? Well, we'll switch over here to the Excel spreadsheet to show you. Right now, week 15, I need to be at or around $3,800. That means that I need to push another 3 weeks out by the 18th, or the 18th week, I should say, is $5,000. But I am looking to capitalize on a lot more money than that. So we are looking more like I'll be pushing anywhere between week 23 to as high as week 27. This would be big time help because I want to get to that milestone right here, which is in week 36, which I will be full-fledged, the first full week, I should say, of over 25,000. Of course, week 35, you hit that 25,000. Why is that important? Because that gets rid of the pattern day trading rule against your account. I, of course, will start using my day trades going forward. I want to stop making that mistake and taking huge losses that are cutting into the account, and I need to start using them also, not just to stop the losses, but take in the gains. It's good to take that 10%. You hit in that week, just do it. Get in there, take that money, and get out. It's the best case scenario. I need to start focusing more on getting that 10% gains after I recover the account, because that is what this entire process is about. It's all about not hitting home runs. It is about taking singles. I need to get back into the mindset, take my singles, get out. And hopefully I can do better in my swing trading, which is partially why I've been having to go for more home run hits, is because my swing trading has not capitalized like I expected. So that is where we are at with this 52-week challenge. Again, if you like these videos, smash the like button for me. Helps with the YouTube algorithm. Most importantly, subscribe. I need to grow the channel. That's the only way I can get more views, and I hope I can bring more content. Again, we're looking into a great bullish week ahead of us, and hopefully the entire month of May will be huge improvement, and we're going to see the small account grow. Hope you all making some money. Let's grow together. Have a good one.